Hey, this is MicDrop5 for Price Action Trades, and we're going to go through some charts on TradingView today. I post all of my charts on TradingView, and we're going to look at the before and the after, the results of these setups, and I'll try to talk a little bit about price action as we do that. So these haven't really done much yet. We're going to jump into some of these that are playing out. So here we go. This is a short setup, and this actually there's going to be in the comments, I'll put a link to a video on YouTube that Tradersumo did that really explains how to look for trend shifts. And I highly recommend his course. If you guys want to learn price action trading, it's the best course out there, in my opinion. Not that I've taken all of them, but it changed my world. So we're going to go through these one at a time. Here's the level to hold. This is your swing high. He'll talk about this in the video. And this is your level of validity. That trend is now down. Okay, so if you wicked below it and held, this would be a hold. But in this candle here, we closed the candle body below this. So we're now in a downtrend. And we just wait for our entry now. You don't put your entry here. Last year I was doing that. I was like, oh, this candle closed here. I'm going to short it right here. That was not the place to short. This was your signal, and this is your short up here. So let's look at how it plays out. And there it is. Got my entry and got my first profit target right there. Beautiful, beautiful trade. We'll go through. This was a long, so this one's not a great setup. I probably shouldn't have taken it, but this was a weekly here. This was a weekly chart, and we were on a Thursday. So I was looking at this entry going, well, if tomorrow they manage to get up to here, then we're looking at a bounce from there. So I kind of jumped in here. The following day, it came back down just before the bell, and I just got out pretty much where I entered because it looked like it was going to close below. And then sure enough, it dumped. And I think the following week I took a small position here, but I don't really like it. I wouldn't recommend it until it gained something of significance there. But let's look at some of these other setups here. So this was a bunch of action here. So here's your range, and then they broke below, and then immediately went to top of range, which is a perfect place to short because price is going to have to come down to here for the most part to then continue up because of this. So it's playing out very slowly. I expect it to hit the PT. Not really like a classic setup. This one didn't do anything. So let's go to this. This is a perfect short setup. So here's your high. Here's the move that produced the high. Did we close below it? Yes. Downtrend confirmed. And then we just look for our entry, which I was looking at that right there. And this is what it did. Got my entry, almost stopped me out, but I hung in there, and now we're in profit. And this one here they front ran it. So this was a kind of a wonky setup. So I kind of expected that it might not go, like predictably. And sure enough, they just dumped it from here. They didn't get to the zone. But look at how they respect the levels still, like this and then this. That was a perfect long, actually. Or if I was in a short, that would have been profit target right there. So let's keep going. For those who are new at trading, when you short something, that means you make money when it goes down. And when you long something, you make money when it goes up. So if you think something's going to go down, hit the red button. If you think it's going to go up, hit the green button, the buy button, the sell button, I don't know what the controversy is around shorts. I think it's totally stupid, but they're an integral part of any kind of liquid market. And did we look at this? Yeah, we did. We just looked at that one. Okay. So we're going to go to this here. This is a really great short setup because when I saw this, it was here. And I was like, I would have taken my short here. This is just bonus right here because it's higher. So same thing. It just kind of dumped from there and into profit. And that thing's going to run, in my opinion. So this one, Procter & Gamble, was just so profitable. I looked at this and I was like, this is when you see slow, intentional curving of trend like this is buyers and sellers having a conversation and sellers winning out. And then when the price comes back up for a confirmation, I mean, that's just a no-brainer to do a short on that. All of these people that bought up in this range here were trapped through this move. So when price comes back up, they're relieved to get out at break even. And that's why there's a lot of more sells going on there. But here's how it played out. Price went here. I took my short here, and then when it popped, I doubled down and I grabbed some puts on it, some options, and made money on the dump. So, and then actually I took profit on my puts here because I saw this was the level that I was aiming for. That was my first PT. I just took profit right here, which was like a perfect place. Obviously it bounced from there, so it was a good trade. This one similar, but I got stopped out of part of my position here. The rest is running, and if you look at this, 1, 2, 3, 4, 5, 6 attempts on a weekly, 6 weeks, they've been trying to close above this level here. I'd say that's looking pretty dumpy to me. Maybe they wick it up one more time and for liquidity, but I don't think so. I think it's gonna start to come down to here. So hopefully that'll be profitable too. This one, they front ran. I saw this level initially. I was gonna go like, okay, that's a good level to short right here, but excuse me. But then when I started looking at this chart, I saw this right here, and this, when I see an entry that is so close to the natural stop loss, then your risk reward is going to be good. I mean, just to this level right here, that's a risk reward of 3.5. Anything over 3 is worthy of a trade, in my opinion. And the setup is clean, so I was like, they might dump it from here, but I'd really like to get it here. And sure enough, they just dumped it. It still might get back up there at some point. That would be a really great risk reward trade right there. So let's keep going through these. This one was absolutely perfect. This is textbook short right here. When you see this move produce the high, and then we got below it here, so we know we're in a downtrend. Price is going to come back up. You want this right here, and sure enough, I got it to the cent. Literally, I front ran this by like 1 or 2 cents, and I got a perfect entry. I was never underwater in that entry, even for a moment. It was a perfect trade. I'll be taking some more profit here. And then let's go to this one. So this is another one like Procter & Gamble. We see this big, intentional, slow pressuring of a turn here on this giant conversation between buyers and sellers. Sellers win out. Then you get this little sproutling up here, this weak little sprout. It's going to try to challenge all of that. Yeah, right. No, we're going to chop that down, which I did. I actually front ran this. So I got an entry right here, and then I had more orders up there. And it never made it up to the top, so I just got a smaller trade, but it did the thing. And we'll keep going through these. A lot of shorts here. I'm not just a short trader. I do take longs sometimes too. And actually, like throughout a bear market, I'll still be taking longs too if they're good setups. It's just the last couple of weeks there hasn't been too many of those. So this right here is another one. Same setup, same kind of thing. Here's your high. There's the move that produced it. We got below that. Downtrend confirmed by this, getting below this. Comes back up. We want this right here. And oh yeah, that's right. I forgot about this one. Yeah, I got wicked out like crazy on this one. But you know, small loss because my stop was right there. And by the way, that's why you don't just arbitrarily hang stop losses up in this zone. You know, that's your stop loss. That is the place to put it. This is the place for your entry. If it doesn't work out, it doesn't work out. But that's a trade that was worth taking. It's probably just low liquidity or something going on there. Whoops, I just clicked that one. Okay, so this one I got front ran on. It was, yep, didn't quite make it to the zone. Right idea, just didn't get my entry on that. This is perfection. This one was another just perfect short setup. So you could argue that this is the move that produced the high. We got below it. Trend shift is confirmed. We go up here. That's where I want my entry. And to the cent. Another perfect trade. That was like literally to the cent. By the way, fundamental analysis and due diligence and watching the news and that kind of thing is never going to get you these kind of entries. The only thing that gets you entries that accurate is price action and knowing. So why does price action work? Why do these levels work? Because of where people made their entries, where their orders were, where are they trapped? You know, when price dumps and they're trapped, and then price comes back to that level, humans are going to do predictable things based on their emotions. That's why this stuff works. So it's more accurate in the short term than any other form of trading. You know, fundamental analysis works for longer plays, but if you want to know what price is doing in the near future, this is the way to do it. So this right here was a setup that wasn't really clean. It was very wonky, but I took it anyways because I thought, well, this was a bunch of action going on, a lot of buys here, and then we dumped below it, and then price came straight back up to test top of range. And not only that, but this top candle here was a 50% wick here, so it was a big rejection candle, which happens at the top of range sometimes. So I kind of liked it. I took a position. I got stopped out because it did this disgusting move here. Yuck. This one, this is a good example of a reverse of a long. Okay, so it didn't work out, but it was a good trade. And this is how, you know, you see this downtrend here. And then a lot of people would see this breakout here and go, oh, breakout trade, let's jump in, right? And they'd get wrecked by doing that. The place, here's your low, here's the move that produced it. We got above that. So it's just like in that video. You can look in the comments below. Tradersumo will explain it best. I'm going to let him get into the nuances of it. But move that produced the low, got above it, confirmed, trend is shifted. In this case, it didn't work out. This is an interesting one to look at. But you don't take your trade here. You take your trade here. So that's what happened. I got stopped out at a small loss, but if I had FOMO'd into this breakout move, I would have been wrecked. That's why I don't do that. I don't know how many more of these. I guess, yeah, we got a few. So here's another short setup. Same thing. This is the move I'm looking for. I took this short and it played out. And it's respecting these levels. Here's another one. This one I got stopped out of, I believe. Yeah, I got stopped out of this. Right idea, just a little bit, maybe low liquidity or something up here. Just whatever happened. Sometimes you just get stopped out, and that's okay. Like, I would take that trade again. And then I actually grabbed a long right here. And the reason I did is not because I think that this particular chart is going to go up from here considerably. I think it'll maybe pop to here perhaps, or even just to here would be a long worth taking, because here is your stop loss. If you see this, so this was the level to take your long, and because the stop loss is so close to this, the risk reward was really good on this trade. So I took one, and it's playing out, and hopefully I'll probably take 50% here because it's a counter trend trade. When you're trading along in a bear market, that's a counter trend trade. It's a good idea to take 50% at first profit target as opposed to 20 on a normal trade. Like if you're in a bear market trading shorts, then you would take more like 20% at first PT. It's not like a hard law, but it's a good rule of thumb. The worst thing you want to do, you want to avoid taking a trade and then going into profit and then eventually watching the profit disappear and getting stopped out at a loss. Or worse yet, if you don't have a stop loss and you watch your trade go into profit and then you're a bag holder, that's just like the worst thing you can do as a trader. So my New Year's resolution this year is to take profit at first profit target 100% of the time and never fail to do that. I don't take all of my profit there. That's not what I mean by 100%. I mean that I will never fail to take a partial exit of my position at first profit target ever again. And I recommend you all join me on that New Year's resolution. All right, that's it. I'm going to go start getting ready for the market because it's opening in 7 minutes. And I hope you all have a really great trading day and all your trades are profitable. Later.